All right, good afternoon then, folks, as we head into US trade on Wednesday, the 11th of October. Now, we're into the economic data for the week. We just had PPI out about an hour ago, slightly higher than anticipated, but we'll speak about that in a bit more detail as we get around to the calendar in a couple of minutes. But what we have had today is a pledge from Saudi Arabia that they're going to help are going to help stabilize the oil market. Now, there was some jitters with the fact that this conflict in the Middle East between Israel and Palestine, that would cause a bit of a decrease in the supply of oil. Obviously, there's a number of oil rich parts, or that obviously that is an oil rich part of the world. So if oil will stop being produced from places in and around that area, that would cause a spike in the price of oil, which we did see at the open on Sunday, as any conflict in the Middle East is positive for oil prices, as it can potentially cause a reduced supply of the commodity going forward. But Saudi Arabia do back, or at least they say they back efforts to stabilize the oil markets if needs be, which will probably come then in the form of pumping more oil to offset any losses due to the ongoing conflict over that side of the world. So a bit of a move lower in oil prices now, giving back the gains that it made from Sunday night's open over the weekend when this thing kicked off. So oil cruising lower at the moment. China stimulus hopes, I forgot to mention in this morning session, that China are preparing a fresh stimulus measure in order to prop up their struggling economy. So that is a positive for stock markets, which is a bit of a reason as to why you have seen stock markets positive in the positive over the last kind of day or two post the crisis in the Middle East kicking off. You can see US equity futures slightly higher, European equities mixed, Asia Pacific equities higher across the board, in line with that potential Chinese stimulus measures. Oil prices lower in today's session, which obviously we have spoken about as to why. Global bond yields negative, albeit US yields have had a slight pop higher in the last hour, which we will look at now in a minute. But that lending a bit of support to stock indexes, you would think. But is it a bit of safe haven? Is it a bit of interest rates cooling off? Kind of remains to be seen as of now. US dollar mixed across the board, which is unsurprising. Your Aussie and your Kiwi are lower, but it's not really driven by any sort of risk sentiment. Your Aussie and your Kiwi are lower, stock indexes are higher. So FX little bit kind of safe haveny in FX at the moment. Swiss franc higher across the board, Aussie and Kiwi lower across the board, but that is not being relayed across markets. You do see yields lower with bonds higher, which is the expected reaction with this whole risk on risk off bit of analysis. But PPI, as you can see, the monthly figure consensus 0.3, actual 0.5, core PPI 0.2 consensus versus an actual of 0.3. So a slight tick up in PPI measures, which is producer price inflation, which is the cost of creating goods. CPI, which we get tomorrow, is the cost of purchasing goods. So maybe a bit of a front runner into CPI tomorrow. Let's see how that pans out in tomorrow's session. But expected reaction to that would be dollar higher and stocks lower, in line with kind of recent months of trading. But stocks not doing too much, a slight bit of upside at the open, as you can see. But stocks, they sold off initially, then rallied back higher, then sold off, now they're rallying back higher. So pretty difficult to work out in terms of direction across the S&P, the Dow Jones, and the Russell. But the Nasdaq has popped higher at the open and looks like it wants to kind of truck higher, in line with European indexes in this morning's session. European indexes quite heavily linked to China, so they do like Chinese stimulus measures, which you can see in the price of the DAX and the Euro stocks pushing higher in this European session. FTSE not doing too much. You spoke about the FTSE pushing higher a little bit at the open this morning, but really it's just chopped sideways since then. The VIX continues lower, which is somewhat supportive for equity markets, but equity markets don't know what they want to do with that inflation figure being slightly higher. They were sort of running with the narrative that the Fed were done interest rate hikes, which we did get a comment out from a couple of Fed officials saying that, or certainly Jefferson on Monday, saying that certainly Jefferson on Monday, saying that interest rates may not need to be hiked more, as yields being where they are at may potentially do the trick for the Fed. But this Nasdaq continues to push higher and looks like it wants to push further higher. Let's see how it reacts off these kind of mid short-term highs back here. Can we get a breakthrough here? Can we continue to push higher? Let's give it a bit of time to wait and see. Does it do just that? But PPI with the US dollar, see a bit of a spike lower, then a spike back higher. You can see if you jump on the 5-minute, spike lower in euro dollar, then a spike back higher, which is a bit of dollar strength and a bit of dollar weakness. Market's somewhat undecided as to what way they want to go, but is this a bit of a sign? Inflation being higher would normally cause a spike higher in the dollar, which is not really what we're seeing at the moment. We are seeing a bit of weakness and a bit of strength and a bit of strength and a bit of weakness. It's a little bit tricky to work out at the moment, but higher than anticipated inflation would or should cause the US dollar to push lower, or should I say push higher, which would make kind of stocks push lower, should make yields push higher, which they are having a little attempt at higher at the moment. So, is this a bit of a sign heading into CPI tomorrow? We have had comments from Fed officials that they may be done hiking interest rates and yields may do the trick for them. Is that then a situation where this US dollar trend has run its course? I think it is interesting. Certainly, I think it is interesting. I wouldn't go and say that just yet, but even if we get CPI tomorrow and we get CPI in line that sells lower, or the US dollar moves lower, or even if we get a beat on CPI and it doesn't sustain any upside, well, then that tells us all we need to know, and that should probably set us up for a bit more of a medium term move on the price of the US dollar. So I don't want to go jumping into anything just yet, but there are signs there that this US dollar trend might be done and dusted. It broke its 11-week gaining, 11, well, it had 11 straight weeks of gain. It broke that streak last week, albeit slightly. I mean, is it done its course? I mean, you have a look at the dollar index. If we just get this up, obviously we've had massive, massive upside across the US dollar beginning back in July, 11 straight weeks of gains, towards the weekly candlestick. You see it's slightly red there. Is this a sign that markets are turning around? You've got a nice shooting start 2 weeks in a row. You have an attempt at a push lower to start the week. Could we make an attempt back lower to this kind of 104.70 region? It wouldn't be out of realms of possibility, but to be honest, it doesn't look positive with the dollar at the moment. You would expect to see that continue higher or push back higher again post PPI with those figures, and that is not what we are getting, right? As I said, I wouldn't just want to go jump in piling in and selling a load right now, even though we've had a bit of downside. But you saw how markets reacted to that NFP print the other day, popped higher and then reversed all those gains and extended lower. That was obviously due to the reasons we've alluded to earlier, NFP being higher than anticipated, but the unemployment rate ticking up, wage growth lower, not a positive figure, even though the headline NFP figure was lower, as continued lower into this week's trade. We get to this week's trade and it doesn't sustain any upside off positive or higher than expected PPI. If we get higher than anticipated CPI tomorrow and it still doesn't gain any upside, well, I think that's a pretty clear-cut trade short on the US dollar. So for me, I'm not going to go piling anything into anything just yet. Do want a little bit more confirmation that my bias may potentially be proven correct, but I don't think it looks good for the price of the US dollar. Looks a decent sell up here. Do you want to sell it now, or do you want to wait to CPI? It's a tough call. It is a tough call. On risk reward basis, you can take a punt short on some US dollars. Wouldn't be the worst idea in the world, but then again, CPI comes in hotter than anticipated next, or let's say next week is tomorrow. If CPI comes in hot next tomorrow, I messed that sentence up twice in a row. If CPI comes in hot tomorrow and it still doesn't gain any upside, I think that is a pretty clear cut trade. So important data tomorrow. Minutes, are they likely to do much today? Certainly if it creates a fresh bout of selling in this evening's trade, that will be interesting. But CPI tomorrow, we will be looking at that with a keen eye. Is this the end of the US dollar uptrend? Should provide some solid trading setups on the way down if it is.